Hi, my name's Prem Raja and welcome to the Currency Blog TV. Last week was a very busy week as far as the pound euro was concerned. We saw the pound euro exchange rate up to 130, which is the highest we have seen since February. Now, the reason why we saw the pound euro exchange rate hit 130 is that an opinion poll was released for the EU referendum. Now, this particular poll showed that the Remain camp were 18% ahead. Now, this goes to show one thing. Every time a poll is showed for the Remain camp being ahead, the pound strengthens. Every time the Brexit camp are ahead, the pound weakens. So what I would say is that if you are trading with the pound at the moment, be very wary of opinion polls. Moving on to Monday now, we're expecting German manufacturing and services data to be released. Now, this is expected to be released at a figure of 52. Now, just so you all know, any reading above 50 for manufacturing is good data. Now, it's also important to know that Germany is one of the biggest contributors to the EU economy. So any data surrounding Germany is usually a pretty big market mover as far as the euro is concerned. Tuesday is going to be a pretty important day as far as the euro is concerned, and that's for two reasons. First of all, Germany are expected to put out their GDP figures. And as we all know, anything that comes out of Germany is a pretty big market mover as far as the euro is concerned. Secondly, on Tuesday, the Eurogroup will be meeting to discuss Greece's next debt repayments, which is due in the next couple of weeks. So if you have anything to do with the euro over the next week or so, Tuesday will be a very important day, as we do expect to see quite a bit of volatility surrounding this particular meeting. Skipping on to Thursday now, we're expecting to see a release of GDP figures out of the UK. Now, as we all know, the UK economy is in the spotlight at the moment with the EU referendum in the background. So if we do see a good figure, we are expecting the pound to strengthen on the back of this. However, if we see a bad figure, we would expect to see the opposite. Finally, on Friday, we're expecting to see a GDP release out of the US. There is a lot of volatility surrounding the US dollar at the moment, and that's mainly because there is a rate hike on the cards for June. Now, if we see a strong reading, then it will back the case for a rate hike in June. However, if we see a weak reading, then it will slim the chances of a rate hike this June. Thank you for watching this episode of the Currency Blog TV. Make sure you follow us on Twitter, like us on Facebook, and visit our website. I'm Prem Raja, this is the Currency Blog TV. Thank you.